Welcome to Trading Lounge and the US indices for Tuesday, March the 1st. So on the weekly chart here, we just going back over things, we can see that the stochastics is low. That can be helpful. It has been helpful in the past. It doesn't mean it can be helpful in the future. It could just sort of flatline, but it was good here and a few other little places. Anyway, it's it's an indication that it's oversold, but it's not conclusive in that regard. We're also looking for wave 3 back to wave 4 at 4,100, so we've hit that target. And now we're just trying to gather evidence to see if we've got to move to the upside. We have to be careful about that. There's still possibilities that the market can go down. There's also the conflict that may or may not get out of hand. And also too, wave 4s tend to be complicated, and we never really know the answer of them until they mature to such a point that they can only be one thing. But when you're in the thick of it, in the middle of it, we end up having, could it be this and could it be that? And it's a great puzzle to solve. And I thank everybody for their input into the pattern. But as always, we have to look for safe trades, and we have to take everything step by step. So today we'll be looking at, as yesterday, a couple of different scenarios. And so let's go in and have a look. So on the daily chart, now this has been a count that I've had since day dot, an expanded flat, and obviously there's things wrong with this particular pattern, but I've just sort of left it here, and it hasn't sort of bothered me in terms of looking at it up off the low here, and we'll also be looking at it in other ways as well. So what we're trying to establish here is we're trying to establish an impulse wave here, and we're seeing that in stock as well. And we also know that the balance point for this whole correction in this space here really is the 4,500 area here. So I will just highlight that to point things out. You can see that it was the resistance, support, resistance. And so look, I guess if we got it as support again, then that would be a positive thing to the upside. Of course, that's a long way away, and because we've got an impulse wave here, well, it appears to be an impulse wave, then we would see a move up, a move back, and then a move up again. Now, because we're getting 5 waves here, that means after correction we can get another 5 waves. We also know that that would leave us with 3 waves at that point. So it's also possible for the market to come down again at that point and become more complicated. I mean, we could even get a triangle pattern in here. There's still a lot to go on within all of this. So we have to be quite careful. As I mentioned yesterday, that if we got a classic trading levels pattern sitting on the 4-5 here, because that's close to the 61.8% retracement level, if we got that support on here, then we could be bullish at that point. But look, it's always step by step, and on this pullback here we can look to build in a trade on the long side here, but we'll have to manage our exposure into that 4-5 area there. So another way to count this, we'll look at 3 different ways. This is another way to count it by putting wave 3 up there. That's doable, and having a WXY here for that. And then looking for 5 waves up. But this could also get more complicated as well. We could put the W over here and an X over here, and then a Y over here as well. So, as I mentioned, we're not out of the woods yet, where, we could say that, we could say anything really. It could be finished and it may not be finished. We know that we're at the lower end here. We know that it appears to be an impulse wave up here, and we're seeing that in stock. Watch the stock video today. So we should go higher, but getting that 4-5 here would be, that would be critical in really confirming further upside at that stage. So on the intraday, we'll also look at a count that's bearish as we did yesterday. I've made a little bit of adjustment to it. but the pattern's still the same in that we're looking for, from the low here, we look for 3 waves up to the 4500 area or a tad above that, and then a 3-wave move down. We could probably even look at it as a 5-wave move down, but because we're getting 5 waves here, yeah, so if we had a larger 5 waves here, then that would be okay. We could look at it as an A and a B and a C wave here, and then down from that point. So, but yeah, it does appear that we've got 5 waves here and more importantly on the cash market for me. So on the cash market, we've got a pretty clear 5 waves to the top here, because on this market, we're just sort of topping in this particular space here, but the cash market has taken that top out. So this is a way to look at it at this point. And yeah, so let's go in and have a closer look. I just want to check on, because yesterday when we had a look at in the stock market, when we were looking at our daily stocks, we could see that the strong move up here was, let me just get this up. Yeah, so yesterday we're looking at this being like a nice positive piece of a range in this bar here, and we got the volume to confirm that price action. And then yesterday we noted that, not with the S&P, but we noted it with on the stock market, that the current move up here had a shorter range and it was on lower volume. So we know that, well, that's divergence, because it's the relationship between the volume bar and the price bar. And when we talk about the price bar, we need to take into consideration the open, the close, and the range. And then it's also the relationship to the next bit of volume here, and the volume bar's relationship to the previous volume bar, and also to the bar itself. And we could see that yesterday we had a shorter range in stocks and also on lower volume. So we knew that we were close to a top, because that's divergence. That's what indicators will show, but you can just forget the indicators and go straight to the volume and the price. Most of the indicators are based on the price and volume anyway. Yeah, so here we're seeing, so we knew that we're going to be getting a weaker situation. We thought that we'd get a bit more of a high on stock, and we did in most cases. And now we're seeing a lower close than the open, but we're seeing it on lower volume. So we know that this bar here is also part of a corrective pattern as well, because for a trend to be a trend, we need increasing volume, be it up or down. So yeah, anyway, that's where the volume is. So yeah, we should see that sort of turn lower as we thought yesterday, and then another move up to this point. And like I said, I don't know which is going to be the right move here. We only know parts of the story, but what I can say, reverting back to the trading levels, if we get support on the midpoint, this minor level 5 here, the 500, the 400 is not, 4,000 is not important, but it's all about the 500. So yeah, if we get a nice classic trading levels pattern sitting on that level, well, then we know if that's the 4-5 here, then, you know, the arrival, the reaction, the first high above the level, the ABC, and then sitting over here, then we can go along from the top, and buy new highs, and that way the market proves to us it's strong, and that's what we'll be looking for. So until we get there, I don't know if we're going to have an ABC here and then down again, or we can just continue to the upside. Let's have a look at this particular trend that we've got here at the moment. We're going to go to a tick chart. This one's 2000 ticks, and this is the basic pattern. Now I'll put this wave 4 here, but I don't know if that wave 4 is there, so I'll just put that over there because I don't want to lead folks astray without knowing anything. So in this move up here, we've got 1 and 2 and 1 and 2 and 3 and 4 and 5 here. So we were up here yesterday, and then obviously it's fallen out of bed here and to the wave 4 one lesser degree. So it hasn't really made a good high here, but the cash market it has. Let's just take a closer look at this. We'll go from 2000 ticks to 5 ticks. So on this 5 tick chart here, we've got 1 and 2 here, and we got 1 and 2 and 3. Nice 4, wave 4, 1 2 3 4 5. We're counting up here. So we've got this wave 4, and then we've got 1 and 2 here, and 3 and 4, and 1 and 2 and 3 and 4 and 5 to here. Now the thing here is that we've got 5 waves in this move here, and then a correction, and then another 5 here. So technically, you know, for traders, we could look at going long here if because if this was going to be, well, if it was going to be wave 1 here, then we'd have an ABC, but the ABC would be a zigzag pattern, which would be a 5 waves for the A wave, 3 for the B, and 5 for the C. We could also have a B wave here as well, in terms of looking at different patterns to the upside, and that would bring in more of a complicated pattern. Now, as I mentioned, it hasn't made a great high above here, and it may do that. I looked at this as 1 2 3 4 5 for 1 and 2 here, but I suppose, I mean, I haven't pulled that apart, and this is all a little bit dodgy in terms of, yeah, it doesn't count very well here. Let me just go back over that. I mean, I can get 5 to this point, but then that leaves me short here with this. Let me go in here. I suppose we could get that as 1 and 2, 1 2 3 4, and that. Yeah, splitting hairs a bit. Look, if I was a trader, I'd be taking that top out here, and if I was taking the top out here as a sort of a you know, short-term trader, then I'll be looking for a classic trading levels pattern here. So we've got the arrival coming in, we'll have the reaction, we'll have the first high above the level, and then we'll have a little ABC pattern here, and then we can go up from, you know, take that top out or that top out here. Let me just shorten this up a little bit. So this is the correct way to do it. Well, it's a bit like this. If that was the high here on that one, then you can drop it down to that one, and that keeps. If it doesn't get triggered, well, it keeps you safe, because the market's got to prove to you that it's going up at that point, you know. So this is the same thing here. This is the way that you won't miss anything. So, but apart from that, I mean, it's not really displaying a great. Unless I need to look at all of that. Yeah, no, it's not really giving me what I want or was expecting in that regard. But, yeah, if that's correct, then we'll see this come back into this space here. But the problem is with this little pattern here is that we really haven't made a decent high above here. So we could make, you know, you know, a further high up here for this. That's the thing. But anyway, if you're looking for a, you know, if you're a very short-term trader, that's what you'd be looking for at that point. Look, the basic takeaway here is that on the cash market, this move up here has taken out the top here. Not by a lot, but enough, you know, and we can count 1 and 2 and 1 2 3 4 and 5 here, and this one's taken out the top here. This one may still go up further, based on 1 and 2 and 3 and 4 and 5. So if you're trading long here, it's just you know, it's just scalping stuff, you know. But we still could see this this ABC pattern here, and yeah, and then move up. But that will all be up a bit higher. Let's just have a look at the other guys. So that's my 5 tick chart. So I'll take that away, and I'll just move this over to here. So this is the NASDAQ in this case. So we're up to here yesterday for this. Let me just go back over this. So first of all, this needs to be lifted up 1 degree of structure, but 1 and 2 here, 1 and 2, 3, 4, 5 for the third wave, fourth wave, and fifth wave. So in this case, I'm including 1, 2, 3, 4, 5 here. Could I go about it in another way? Could I just have that separated from that point? That would be 1, 2, 3, 4, 5 for 1 here and 2 here. And then 1 and 2 and 3 and 4 and 5 for that one. Yeah, could do. Yeah, I could separate that. That's all right. But look, it's the same sort of story in a way, is that it appears that we're getting an impulse wave to the upside for these. So we can just plonk that on the top there. In this case here, this is sort of interesting. This is what I really wanted to look at. Is in this case here, first of all, we've made a decent high above this one here, which is great. And it also appears that we've got a better looking structure in this case as well. I was just looking at this final structure here. That's have to be 1, 2, 3, 4, 5 to that point. So we'd need to get the third wave all to here, and wave 1 and 2 and all part of the third, at least to that point. Some, yeah, a bit squashy in there, but anyway, it's in better shape, whichever way I look at it. So what we can do is just put that up here. Now how's this correction looking here? Is that any better? So we got 1, 2, 3, 4, 5. We've got 5 waves to here, and then we can look at this as 1 and 2 and 3 and 4 and 5. So really we've got an ABC pattern here, unless we look at this as wave 1 here and 2 here and 1 here and 2 here. But if this is breached here, then you can go long at that point. So a classic trading levels pattern on 14.2 would take you higher at that point if you were looking to build into this on that side of it. So a little classic trading levels pattern on top of group 1. And if you get support on 14.3, then you know the market's going to be separated from the 14,000, and you'll be looking at the 14.5 at that point. But yeah, I mean, we've got bigger problems than this little point here, but the main point is that we're getting impulse waves we've got our first impulse wave to the upside. And the Russell, so yeah, with the Russell, I've got from the top here, we've got 5 waves down here, the wave 1 here, an A and a B and a C wave here. That takes out that top there. I've looked at putting wave 1 here, but it still doesn't matter. You still get wave 2 here, but it counts better with wave 1 here and 2 here and then 3 here and 4 here and 5 here for that. So we've got 5 waves down. So I kind of went back and had a look at this particular pattern here, because we've got 2 choices here for this. I can either go put wave 1 here and 2 here, and that counts as a nice 5 waves here, by the way, and then 1 and 2 here, and then 3, 4 and 5 here for the third wave, an A and a B and a C here as an expanded flat for wave 4, and that's how we get that. We've either got it like this, or we will need to put wave 5 on top here, and then we will have to have a look at this 5 waves here as just the A wave, all of the A wave, and that means we'll come up for a B wave and then we'll go down for a C wave again. So yeah, is that possible? We'll see at the time, you know, but for the time being, I'll just leave everything over here, and we'll see where the SP500 is, and the 500 and so on, and we'll see where that is at that point. Our main point here is building a case off this low here, and let's go in and check on that on the tick chart. I think I forgot to do this chart yesterday, so apologies about that. Sometimes I just lose the plot. So this is the low area here. Once again, this is even a better 5-wave structure. So we've got wave 1 here and 2 here, and then I've pulled all this apart for wave 1 and 2 and 3 and 4 here, and then up for 5 here, and wave 3, wave 4, and then in this case we've also got a better picture up here for this. So in this case I'm looking for an A and a B and a C, and it's the same here as well. We've got 1, 2, 3, 4, 5 for the downside, so that means that we can go long above this top here. So it's always good to gravitate over to the closest largest number. So obviously the minor level up here is the most important. That's minor level 1, part of minor group 1. And then from 2000 to 100 here, we've got 1, 2 and 3, 10, 20 and 30 in here. That's all of subgroup 1. And then we've got the midpoint here, which is 50. And then we've got group 2, which is starting with 80 here. And with 80 we've got 65, and of course 72 in here as well. 2072. Give that a splash of color just to give it some identity, nothing special. And yes, we've got group 1 in here, so just basically, you know, for the folks that are a little bit new here, we're just using the Fibonacci sequence as a price ratio. So as a price ratio from, say, from 0 to 10 here, we've got 1, 2, 3, 5, and 8. So that's just the basic Fibonacci sequence. So it helps us with the geometry, and also the psychology fits in. And when I talk about psychology, I'm talking about how people think of numbers, you know, triple numbers, triple zeros, double zeros, whole numbers, even numbers, odd numbers. You know, they've all got their priority of how people think. You know, people think of 10 more so than 9 and 11, so more orders are going to be at 10. But if you know that, well, then you don't go putting your stop at 10, because that's where the market's going to be pulled to. You don't want to put it at 9 or 11 either, because, you know, you've got to give it a bit of space, otherwise you're crowding yourself out. From the low here to here, we've got 5 waves. That means that from this low here, we stick the first flag in the ground and say that this is where it can come back to 61.8, the 1950, a good year. And still, I think the 40s had better fashion, but there we go. So yeah, we'd be looking for something like this. Now, we don't always get a perfect picture with all of this, but let's just see how we go with it, you know. And I could be wrong, and the market could go up. And if it's going to go up, you know, that's 5 waves there. So you need to know that you can buy above that, you know. You could probably go a bit closer now and onto this one. But I'm just going to put it on top of the 50 here, because 5 is the second strongest number. So to get a classic trading levels pattern here, that would be helpful in getting through the old high here. And yeah, the Dow Jones, just we've been keeping a bit of an eye on that. I won't do it very often, but we're still short one wave structure here, because I can count 1 and 2, and then 1 and 2 and 3 and 4, and then I won't go into a lot of detail, but 5 up to here to make 3. The 38.2% retracement level is here. We've got an A wave, a B wave, and we're looking for a C wave here. The C wave is, should still get one more leg. Oh, maybe not. Yeah, 1, 2, 3, 4, 5 for wave 1. Wave 2 here. So we'll look at that as wave 3, a bit dodgy. Wave 4. So I'm still looking for one more move down here. Will I get it? Don't know. Should do, but yeah, there you go. We're still one wave short up here for that though. So in reality, it makes this a corrective rally. I could label this an A wave, a B wave, and a C wave here. And then this is 5 waves here, down for 1, back for 2, and building to the downside. So that's possible. So that'll be interesting. We'll just see how that plays out. Yeah, but, you know. Alrighty, that's it. Thanks for tuning in. Yeah, alrighty, cheers.